Good evening, everyone, and warm welcome to our third quarter's earnings call. We have today members of the management to discuss the business performance of our third quarter, as well as we can discuss about the future outlook of the company. We have today Krishna Prasad Chigurupati, Chairman and Managing Director, Dr. Prasada Raju, Executive Director, and Mr. K. Ganesh, our CFO. We will begin this call with opening remarks from company's management, followed by an interactive Q&A session. Some of the statements made in today's discussion may be forward-looking and should be viewed in conjunction with risk and uncertainty involved in our business. I also request you to kindly get in touch with me if you have any questions post this call. The transcript of this call will be available in our website. I will now hand over the call to Mr. Chigurupati for his opening remark. Thank you all. Over to you, sir.
Thank you, Samantha. Good evening, ladies and gentlemen. Thank you very much for attending our third quarter earnings call. I am happy to inform you that during this quarter, we had commercialized the expanded capacities of metformin and paracetamol APIs in Bonthapally, and also the expanded capacity of PF5 facility at Gagillapur. The initial production is very optimistic, and we believe the enhanced facility shall not only enable us to debottleneck capacity constraints, but also help steadily increase business development. Now, regarding financial performance, during the third quarter of the current financial year, our revenues grew by 14% to 411 crores compared to the similar period of the prior year. In the first half of the year, we were working in the same production capacity level as we had last year, but from third quarter onwards, we had started commercial production with additional API capacity at our Bonthapally facility and PFI capacity in our Gagillapur facility. This enhanced capacity had enabled us to achieve 21% growth in API sale and 17% growth in PFI sale in this quarter. However, we had witnessed a decline in our gross profit margin. This is due to increased price of some of our key raw materials. These raw materials are primarily derived from crude oil. With crude oil prices witnessing a surge during recent times, our cost of material consumed had also increased. There was also a huge fire accident in the month of October at the facility of one of our key raw material suppliers in the United States. Despite this not being directly linked to us, we did have a negative impact on the global supply scenario for that raw material, thereby increasing the price. And the third reason is the APIs produced in the newly expanded capacities are in the process of being approved by customers and various regulatory authorities worldwide. Till then, the new capacities are being sold in the domestic markets with lesser realization. Due to this, domestic sales grew from 17% in the corresponding quarter of last year to 23% in the current quarter. Later on in this call, Ganesh, our CFO, will share more financial details for the quarter under review and also provide revenue breakup. We had completed US FDA audit at our Virginia facility in the US. Post our acquisition in 2014, this is the first time the facility was inspected by the US FDA. Post audit, there was one observation wherein we had submitted our response within the stipulated time and expect a favorable EIR. We continue to closely monitor our product development work and are optimistic we will achieve the target of 10 ANDA filings from Hyderabad and the Virginia facility during this year. During the initial 9-month period, we have filed 5 ANDAs and expect the remaining to be filed in this quarter, the current quarter. I now hand over the call to Ganesh, who will share more insights about our financial performance for the quarter. Thank you very much.
Participants, please stay connected while we have Mr. Ganesh on the line.
Hello?
Yes, sir. Please go ahead. Mr. Ganesh, you may go
Yes,
ahead.
it's going to mute. Are we audible?
Yes, we can hear you now. Please go ahead.
Sorry for this telecom challenges. Let me start with the consolidated financial results. Our turnover grew by 14% on a year-on-year basis. From 359 crores, it has gone to 411 crores. The EBITDA dropped by 7%. The drop in EBITDA is predominantly on account of two major reasons. One is on account of material cost increase, which our CMD has already articulated. And there is also an element of foreign exchange impact on the intercompany loans we have with GPI. This is a translation impact which happened because of strong rupee appreciation for the quarter ended December. We also ended with the profit after tax at 35 crores, which is a drop from 39 crores, translating to a 10% drop on an year-on-year basis, which is attributable to the two major reasons we had highlighted. In terms of breakup by vertical, our total API revenue stood at 34%, PFI at 24%, finished dosage at 42% for the quarter ended December FY17, while for the quarter ended FY18, API stood at 36%, PFI at 24%, and finished dosage at 40%. This is predominantly the increase in API is on account of our new capacity expansion in both metformin and paracetamol. As far as the geography breakup is concerned, our Q3 FY17 for USA stood at 46%, while Q3 FY18 was at 36%. The LATAM remained at 10 for last financial year on Q3 17, while it was at 12% for Q3 FY18. India grew from 17% from Q3 FY17 to 23% in Q3 FY18. As far as the standalone financial is concerned, the revenues grew by 22% from 337 crores in Q3 FY17 to 413 crores in Q3 FY18. The net profit after tax remained at 33.8 crores for the current Q3 FY18 as against 35.3 for Q3 FY17. Our total borrowings stood at 875 crores. The long-term borrowings went up to 365 crores, and the short-term borrowing is at around 511 crores. We actually drew some of the ECBs in the current quarter, predominantly for our capital expenditure. With this, I request the moderator to open the line for questions. Thank you.
Thank you very much. We will now begin with the question and answer session. Participants who wish to ask questions may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We We have the first question from the line of Kunal Saurabh from Motilal Oswal Securities. Please go ahead.
Yeah, hi. Thanks for taking my questions. Sir, first thing, we had a target action date for one product for Jan 2018 from Virginia facility. What's the status of that product, and do we have any query on that product, or is it because of the 483 what we have on that facility? We haven't received the approval yet.
The approval was pending the inspection. The inspection was completed a few weeks ago, and there was one very minor query which is already responded to, and we expect the approval to come through anytime, maybe in the next few weeks.
We don't have any product-specific query which is pending or which we have received from US FDA, right? It's just the plant inspection process.
No, it's something to do with the analytical method. It's a simple question, nothing more than. It's quite simple, nothing more.
Sure. Understood, sir. And second thing, sir, on margins, sir, how should we look at this? The compression of margins, what we have seen over the last 2 quarters, especially particularly during this quarter, and this forex impact which we are talking about. How much of it is something which we can pass it on to our clients?
Okay, let me start with. We'll first address the forex. The forex is mainly due to the restatement of the loan which we gave to our 100% subsidiary in US GP Granules Pharmaceuticals. So since strengthening of the rupee, the reevaluation amount came to 7.8 crores. So this is a very notional figure, and if the dollar strengthens this quarter, that could be a positive. So I don't think we have much to worry
above EBITDA line or below EBITDA line?
We took it in other costs, which is above the EBITDA line.
Above EBITDA line.
Okay.
So that's how that has impacted. And the other major thing is, the second impact is mainly due to the raw material price increases. Like I said, oil has gone up recently, and this has impacted the prices. And moreover, one of our key raw materials, the major supplier of this raw material in the world, had an explosion in their US plant, and this created shortages everywhere, and prices have drastically increased. We normally, for our key customers, they pass on these price increases, but there is always a time lag between having this price increase and the time we get the price increase from our customers. So this will be seen going forward. It will be compensated. And also another key raw material which we use in our formulations, another API, that has again shortages in the world market, and prices have gone up. Even that we have just instituted price increases with our customers, and going forward it should be compensated. And I think I've answered your question, Saurabh. Anything else that I need to?
Yeah, just one more question, sir. These new facility ramp-ups, how should we look at it, and by when do you expect them not to be margin dilutive?
Paracetamol, I think from next quarter it will be going full swing with all approvals. We see no problem, because we were already producing paracetamol in that site. It's just a little expansion. Regulatory approvals are not required, but only information to customers and regulatory authorities. Metformin is a change in site. From GD Metla we came to Bonthapally. This will need more approvals, and for the US market, for our formulations, it will be a pre-approval. That could take about 8 to 9 months. And guaifenesin, when it comes in, which should be in the next 2 months, that also will need pre-approval. Meanwhile, some of these will be sold in less regulated markets, and even though we may not see the full impact of the full positive impact of the expansion, it will be fairly decent.
Got the point, sir. And sir, just last question. The 10 filings which we are planning to do in FY18, 4Q, we are planning to do 5 filings. How many of these will be from Virginia, and how many you would categorize as complex things?
It will be 6 from Virginia, Saurabh, and 4 from India.
And all these 6 will be complex filings?
Yes, they will be complex filings.
Yes. Thanks a lot, sir. That's it from my side.
Thank you.
Thank you. The next question is from the line of Pragya V from Edelweiss. Please go ahead.
Hello.
Yes.
Yeah, sir, I wanted to ask if we are facing any kind of pricing pressure in, particularly in metformin in the US market?
So far, no. I would not say there will never be pricing pressure, but so far we have been comfortable.
Okay.
And even in our ibuprofen, we don't see too much of a pricing pressure. The price increases today we think are going to be temporary. So I don't see any issue of that as of today.
Okay. Because I was going through certain reports, where like people are facing pricing pressure on Fortamet and Glumetza, which may be the obviously these are all towards the similar.
What we do today is our metformin is IR, unlike Fortamet and Glumetza, and our margins are already beaten down. There's nothing more anybody can do to beat down these margins. And because of our sheer efficiencies in manufacturing, we are able to make some margins. Whereas products like Glumetza and Fortamet had huge margins, and those will naturally be under pressure when competition comes in.
Okay, got it. And in terms of capex, till now, what is the capex spend which we have incurred?
Good. Ganesh will take that question.
We have totally spent 420 crores in total.
Okay.
This also includes a spend of roughly 180 crores in GPI, more in the R&D activity. As you are aware, the development cost we capitalize. So including the R&D development cost capitalization, the total stands at 420 crores.
Okay. And for the full year, we'll maintain our guidance?
We should be...
The top line should be as per guidance. Bottom line could, the current year, could be slightly less because all the price increases, we may not be able to get the full effect in this quarter itself. There could be a slightly lesser number on the bottom line.
Okay, but revenue, we should be achieving the, kind of growth which we had said, about 15 to 18%?
Yeah, around 15% is what we think we will be. Yeah.
Okay. My last question is on Omnichem. If you can, throw some light on the current prospect and how have we dealt with the situation where we had, the big customer delaying the order, and we were already, we already had the supply ready. So if you can comment on that, and on the long-term basis, do we still maintain our outlook for Omnichem as a, in terms of revenue and PAT growth?
Yes, on the long term, definitely we see very good prospects for Granules Omnichem. In fact, we have done our budgeting and plan for next 4 to 5 years. We see a 25% CAGR in Omnichem. But this year, there has been this issue, like you mentioned, one of our biggest customers wanted delayed shipments. And we had few customers to start with and just 2 products. These 2 products constituted a major part of our revenue. And when the customer wanted us to delay, it was a hit. Today, we have 5 to 6 products which are being validated and more customers, and these products are increasing, so dependence on any one product will come down in future. So last quarter, we did make some sales, and even this quarter, we have a little challenge. We are trying to talk to our customer. But however, next year seems to be fairly decent, and going forward, it will be quite good.
Okay, can you share share with us the number for revenue and PAT for Omnichem and the other JV, Biocause?
Ganesh?
The revenue from Omnichem up to Q3, for the quarter Q3 is 85 crores.
Okay.
And the EBITDA is around 16.5 crores.
If you could please give the PAT number as well.
PAT is around 12.8 crores for the quarter.
Okay. And this is at the JV level, or this is at the JV level, right?
This is at the JV level, so you have to take 50%.
Yeah. And for the biocause, if you can share the similar details.
Biocause, there was a maintenance plant shutdown in that quarter, and so the revenues were quite low. It was 25 crores with an EBITDA of minus 3.2.
Okay.
And what happens is, for Biocause, I think we have mentioned last time, their Q3, their financial year is December, January to December, and their Q3 comes into our Q3, which is, there's a delay, a quarter delay. Okay. So quarter to quarter it doesn't match by the calendar year, but the last quarter for Biocause had been really good.
Okay. This is my last question, sir. If you can comment on, the OTC side of our business. How do we see it shaping up in the US, and what is our plan going ahead on that front?
OTC is still going a little slow, but outlook is fairly encouraging. Some of the filings we did last year are in the process of approval. We have already got some approvals, products like cetirizine and also fexofenadine. We got approvals, and we are going to commercialize these products in this month and next month. And with new products coming in, we see good prospects for the GCH, which is our OTC division. I think next year should start see an upturn in GCH.
For this year, any guidance you can give? What can be the OTC numbers?
Let's wait till next quarter, and maybe I can share the actual numbers with you.
Okay, no problem. Yeah. Okay, that's it from my end. Thank you so much.
Thank you.
Thank you. The next question is from the line of Bharat Saini from Equirus. Please go ahead. Mr. Bharat Saini from Equirus, please go ahead with your question. Your line is in talk mode.
Yeah, hi. Thanks for the opportunity. So just wanted a clarity on Omnichem side. So can you just reiterate how much sales we have done in last 9 months?
Last 9 months is 135 crores.
135 crores. And we were around 200 crores last year. So we are actually getting back to the earlier levels, but it is not yet showing in the PAT level. So what is exactly happening on that side? Because this quarter we were around 85 crores. 85 crores. So last year we were around 12.5 crore at granules level for this JV. So will it be possible for you to reach that level this year as well?
This year could be a little challenging because, as you know, that some of our dispatches are delayed, and also what has happened is, like I said, the product mix is changing. We are depending more on other products, so the margins on each product are different. It could be a little challenging this year, but we will see by the end of this financial.
So, sir, when you say it is 85 crore this year and you have been changing it to a different product, you have been shifting to the other products. So the earlier products sales have actually come off, and the new products have started ramping up. Is it a right understanding?
That's right. The other products have slowed down. We don't expect they'll come down. Maybe next year they'll pick up. But as of this year, there are different products that are coming in.
No, actually I was asking from this quarter perspective. Have we actually able to scale up the other products?
Yes, we did scale up other products. A few other products, like I said, another 5 products are being produced right now, compared to 2 products only last year.
Okay, so the new products would have generated higher sales during the quarter, right?
A little higher sale. The margins and sale value keeps changing here. In contract manufacturing business, we normally go by the time taken to produce and not exactly by the value. So things keep varying. You cannot say there will be a fixed gross revenue every time.
Understood. So since we are seeing a sharp revival in the Omnichem business because of new launches, and we have seen that the new launches have started picking up, so should we expect a growth in Omnichem next year?
This year, next year will be better definitely, but the real tremendous growth will come in the year after that. 19-20 will be tremendous growth, and by 22-23 we will see a 25% CAGR.
Understood. And so our gross margins has been on a downturn since since couple of quarters now. So when should we expect it to revive going forward? Will the current be a base, or there could be a revival?
There will be a revival of gross margins. We should go to our 20% plus EBITDAs, I think next year, and next year's results should be fairly good, and going forward after that things will be much better.
The Virginia facility is almost on the verge of getting commercialized. So won't it be having a pressure on or dilution on the margins?
There will be a little pressure because mainly depreciation and a little bit of interest will click in. So there will be a little pressure where we are not using the full capacity, but we do expect we should be able to maintain our old margins.
Okay. And what would be the R&D expense going forward? And what was the R&D expense during the quarter?
So during the quarter, we did roughly 8 crores of R&D expenditure.
And for FY19, how much we are projecting it to be?
This is for GIL.
This is for the Indian operations R&D.
And the way forward, we do expect around next financial year, it should be around 25 crores.
For domestic as well as for Virginia facility, both combined?
Virginia would be different. We will actually the total investment could be around in the range of $15 to $18 million.
50 to 80 million. Actually, just wanted to understand. Okay, 18, right?
18, yeah.
Understood. So that means that there will be a major portion of R&D which will be clicking in from the next fiscal, and in terms of R&D, right?
Yes, it would be, but as you're all aware, the US till we really start commercializing products, most of it is being capitalized in the US. And what we spoke of capex last year of the current year of 420 crores includes almost 180 crores of expenditure in Virginia, which had been capitalized.
Understood.
Okay. Like you say, whatever the accounting treatment is, we would be spending something like 200 crores on R&D next year too.
Right, but that will be going through P&L, so that it will be having some pressure. So I thought there could be a decline in the margins because of that. So that was the only thing which I wanted to clarify.
Yeah.
Okay, yeah, thanks. That's all from my side. Thanks.
Thank you. The next question is from the line of Ritika Jalan from Narnolia Securities. Please go ahead.
Good evening. Actually, most of my questions have been answered. I would like to know how will be the ongoing capex plan will impact the profit and loss in terms of depreciation going forward in the next financial year and this financial year.
We do expect the total depreciation of our current capex to reach a level of 95 to 100 crores. And we don't expect any commercial operations from oncology blocks. So this particular capex would actually, the depreciation impact will come in FY 19-20.
Okay, then it will put pressure on the bottom line.
We are already at around 80 to, we will end up the year with a depreciation of around 80 to 82 crores. So there is going to be definitely an addition of anywhere between 15 to 20 crores on account of full utilization of capacity of all the capex. And if you notice, our guaifenesin block should go live somewhere in the first quarter, and the paracetamol also should go with significant higher capacity utilization, and we do expect metformin to pick it up from second half of the next financial year once we get the regulatory approval. So the increased turnover should actually compensate for the total depreciation.
Okay. Understand. Just like to know that what is the for this capex you are doing you will take more debt or you will go for some equity expenses?
No, we have actually, like, in the fag end of completing most of the projects. All the funding has been tied. There won't be no more new financing for any of our capex.
So any guidance for debt payment?
We don't expect any long-term debt apart
from the 100 that we are going to draw.
Yeah, we need to, the last installment on the ECB is due. So we should have, we will end the year with approximately 550 crore of long-term debt.
550 crore. So the debt to equity ratio will reach to around 0.6 times. So it will not like.
It should be around 0.8.
0.8. So
end of the current.
So for long term, we will not reduce the debt.
No. We are matching our total capex plan with the ECB loans, and that will come to an end by 31st March. And there won't be any further new financing in the next financial year.
Okay, understand. And any guidance of tax rate?
So we will be more or less 30-31.
Thank you. That's it from my side. All the best for future.
Thank you.
Thank you. The next question is from the line of Charulata Gedani from Dalal and Broacha. Please go ahead.
Hi, my question pertains to...
Charulata, we can barely hear you. If you could please speak a little louder.
Yeah. Is that okay?
A little louder would be better, Charulata, but I think we can struggle to hear you.
Okay. Yeah. My question pertains to the filings that you have made so far. How much is the addressable market size?
Yeah, Prasad, do you want to take that? Go ahead.
So far, we have actually done 5 filings in this financial year. The number is coming closer to around 600 million as an addressable market for these filings.
Next one.
And any first to file opportunities?
We have actually done one filing which is in nature as first to market opportunity. In this, nothing as a first to file kind of an opportunity. We are looking for a limited competition space.
Okay. Okay. And my second question pertains to traction in metformin. From which geographies has it come?
Metformin is mainly from the United States and Canada, which is North America, and then we have next is Europe. These are the 2 geographies that have given us the most revenues.
Okay.
For the finished dosages. For the PFIs, it's mostly Latin America.
Okay. Yeah. And if I can continue what the previous participant asked about depreciation, you think FY18 the depreciation will be around 97 crores?
Between 95 to 100.
Between 95 to 100. And in FY19, this could go up significantly because of the capex?
That could have the impact of our new oncology block.
The depreciation for the metformin and paracetamol blocks have already started. We are already incurring part of it in this quarter and a little bit in last quarter. And the main increase in depreciation next year will be from the onco block, which we expect could be overall maybe another 15 to 20 crores increase.
Okay.
And Charulata, one thing as a company philosophy, what we are doing today, we have moved away from thinking about net profit, PAT, to looking at operational cash flow. So we have been concentrating more on operational cash flow, and so hence the depreciation really does not bother us. The big change in philosophy in Granules India. We started looking more at cash than just the bottom line.
Okay. Yeah. Right. Fine. My question is mainly to you. When do you see the profile of granules changing with a higher proportion of complex products?
I always said 22, 23, and that still stands true.
Okay. And when will it start?
It will start maybe a year or year and a half earlier than that. Most of the filings are going to get approved at once within a very short period of time, with a gap of 1 year. So it will start 1.5 years before that and peak up around that time.
So some approval should come through in FY19.
Yes, we will get some approvals in 19 and one definitely in the next few weeks. And some approvals for files which we have filed from Hyderabad also should be due in 19. Or even in 18 itself. Some of them will come through in 18. Okay. But 19 will be good products that will be coming in.
Okay, fine. All the best.
Thank you.
Thank you. The next question is from the line of Bharat Ahmed from Spark Capital. Please go ahead.
Hi. This is Harith from Spark Capital. Just a clarification on your R&D spending. You made a comment that 15 to 18 million is the R&D spending including Virginia. And then you made another comment that the R&D spending is around 200 crores in Virginia itself. So can you please clarify?
Okay. It will be about, like I said, about 200 crores from Virginia and 25 crores from India. So that will come to about 225 crores altogether. So let's talk in rupees and let's not mix up with millions of dollars and rupees.
Yeah. And what would this figure be? Any guidance for FY19?
See, today we have not thought about the portfolio to be developed for. No, what we are actually telling is FY19. Okay, this is FY18.
This number, the 225, is for 19, Bharat.
Oh, okay. And then what would this be for FY18 in that case?
It will be actually a little bit more than this or around the same number.
We should be around the same number.
Okay. And your overall capex plans for FY19, will there be moderation versus FY18? And can you also talk about the broad areas where you'll be investing in FY19?
FY19 will be about 50 crores, which will only be operational capex. And we don't anticipate doing any expansions in any of the plants going forward. We need to consolidate a little bit more before we embark on any more capex.
Okay. And it'll be the maintenance capex of 50 crores.
Maintenance capex, yeah, that's right.
And you had launched your first ANDA product in the US through a partner a couple of quarters back. And is that can you talk about how that product has shaped up? Is it a significant contributor now to your formulation segment?
You mean the in-license product or the ANDAs from India?
The in-licensed one.
Prasugrel. Okay.
Yes.
Prasad, do you want to talk about it?
Yeah, actually the Prasugrel launch was done in time the day after we received the approval from US FDA. That's in October 17. With one player that had exclusivity and an AG present in the market with two other players. We managed to earn our fair share in the market. However, we are yet to reconcile what it means to us financially.
Okay. And okay, yeah. Thanks. That's it from my side.
Thank you. The next question is from the line of Bobby Jayram from Falcon Investments. Please go ahead.
Yeah, hello. I have a more fundamental question. over the past 3 years, you've spent a lot of capex, done some acquisitions, gone into a lot of new areas. Nothing much has happened till now, to be candid. Your key revenue profit generators are your core molecules. There hasn't been any high margin molecule. OTC hasn't picked up. Omnichem is not performing that well. So in hindsight, would you say you were too optimistic in the beginning, or is it just work in process?
It's all work in process, Bobby. Omnichem has real good potential. It's demonstrated last year. The first year itself, we did 200 crore in revenue. And this year, it could be a little less or the same or a little bit more. This year is a little different, but going forward, we see a lot of potential in Omnichem. And also the acquisition we made in Vizag some time ago, about 4.5 years ago. So many new molecules were developed there. So much work has gone on, so much work is going on, and so many products were validated, and we have filed DMFs for these products. Everything is a work in process, and going forward in the next few years, we will see lots and lots of improvements. And in the United States, the Virginia facility, we have revamped the facility from nothing, and we put in a team. And now it's next year, we expect to do, this year if we do about 6 filings, next year could be 8 to 9 filings or 10 filings from Virginia. The traction has been built up. So, like you said, it's work in process. The future is going to show next few years, we will see the benefits of this.
Right. In FY17 quarter 4, you made a comment that FY19 will be a new era. I take it that's been postponed a bit.
A few quarters. When I say new era, we'll see the new products hitting the market. And all I can say is, in the next 1 or 2 months, you will see one new product which is first to market. There's only one brand, and we will be the first generic to hit the market. That itself is a big change for Granules from the way we were working before. Q1, definitely this product is going to hit the market. And this is a change in the operational style of Granules from core high volume molecules going into really low volume but high value products. And being the first generic in the market itself is something. But this is just a start. But yeah, like you said, there would be a few quarters of delay in what we have actually planned. You know, India filings don't go exactly as per plan, but we are more or less there.
Okay, and also, how's your company's thinking around free cash flows? Because
like I said, like I just mentioned a little while ago, our thinking or philosophy has totally changed. We feel cash is more important and bottom line PAT number doesn't really matter. So that's what we are working through. So first thing is operational cash flows, and we're trying to balance our capex programs. So this is going to be very important for us, and we are focusing very hard to improve this.
So you're saying FY19 there's going to be no capex. It's all going to be internally financed, whatever the maintenance capex is.
That's
even
right.
FY20. So there's not going to be any equity calls or warrants or debt raising or that sort of thing.
We definitely will not do any equity, that is ruled out, and debt also, unless some great opportunity comes up, we are totally against even any increase in debt.
So your plan is to consolidate whatever capex you have done and try to generate cash out of it?
Yeah. Whatever we want to do, we will do only out of internal accruals and nothing from borrowing or from additional equity.
All right. Thank you very much.
Thank you.
Thank you. The next question is from the line of Vivek Kumar from GC Investments. Please
Yeah, thank you. Thank you for the opportunity. Sir, just wanted to verify this again, that you just talked about that 95 to 100 crores of depreciation for FY18, right?
Yeah.
Which would mean that fourth quarter would be significantly much higher compared to quarterly run rates, 40, 45 crores.
Sorry, can I clarify? The 95 to 100 crore is for FY19.
Okay, it's not for FY18. Okay. Okay.
For the current FY18, we should be somewhere in the range of 82 to 85 crores.
Okay. And my second question is more to do with the tax rate. For the 9 months, you have done with 36% tax rate. So I think you made a comment about 31% tax rate.
The increase in this current
Effective tax rate.
The increase in this current quarter is predominantly because we reversed a death tax assert in our year's books because of the change in tax rates in the United States. So that this is a one-time impact. So we should be around 31, 32%.
Okay. So for the for next 2 years, which one should model for 31, 32%? That's what you're advising.
It depends on the proportion of GPI revenue, which will actually kickstart from Q1 19. That will actually determine what would be our effective tax rate. Today, I cannot give a guidance on the tax rate at this stage.
Okay. And finally, on the gross debt side, where should we around for FY18 and 19 closing? Can you just help me with that? Maybe around 1,000 crore is what you're looking at?
We should end up with around 1,000 crore for FY18.
Okay.
That is March 18. And going forward, 19 should be around, it should be in the range of 900 crores.
900 crores. Okay. Thank you so much.
Thank you. The next question is from the line of Bharat Chaudhary from Sunidhi Securities. Please go ahead.
Yeah, thanks for the opportunity. So once again on this Virginia side, how much capex we have done so far total?
The total capex we have spent so far is 178 crore. This includes partly certain investment in buildings and partly on R&D expenditure which is capitalized. So both put together is 180 crores.
And this will be 200 crore plus for this year.
And we will incur another 25 crore for in Granules India, so the total will be 225.
And what will be the additional in the fourth quarter from Virginia?
The 180 should reach somewhere in the range of 200 to 210.
Okay, so total 230 would be for the R&D for this year, FY18. Fair, Raju?
Hello?
Hello.
I think we lost you.
Yeah, hello. Can you hear me?
Yeah, go ahead.
So it will be 230 to 40 crore for the year. Am I right?
Yeah, you're right.
Okay. So now, how much free cash means we are having on the balance sheet?
If you look at December, we should be having, it's not a free cash.
Cash. How much cash we are having right now?
As of December, it is 110 crores.
Okay. So my question is, do you think that with the same kind of run rate, what the capex, I think 225 to 30 crore we are going to invest in this Virginia in the next year, and some R&D here as well, and currently our free cash flow would be in the range of, I think, 200 crore. I'm just adding PAT plus depreciation. And then there will be some regular capex as well. So do you think that next year onwards, will it be sufficient you to take care of all the expenses from the internal accruals, and as you said that you will not raise any debt and any equity side?
We did certain brainstorming. We believe we can actually manage our requirements without any additional debt.
Okay. In other way, whatever capex we have done from the Virginia side, do you think you'll start getting some dividend out of that in FY19 onwards, or it will be 20 onwards?
No. Some revenue would start coming in 19 because the first product we said we're going to launch will be launched in the first quarter, and definitely there will be a fairly, not fantastic, but a very good revenue there.
I'm talking in terms of the cash flow, sir.
Cash flows, if we keep the R&D spend aside, yes, there would be a positive cash flow from Virginia.
In FY19?
That's right.
And FY20 onwards, do you think that the internal accruals will be able to match all the expenses?
19, I'm not sure. It depends on when 20. When the approvals will come in, I'm not 100% sure. But if the approvals come in on time as we planned, definitely there will be a positive cash flow there.
Okay, sir. One last question. Do you think this 200 crore R&D expenses from Virginia side would be for how long a time?
It will keep, some of the expenses would be, taken into the P&L as more manufacturing happens. So it could come down a bit to maybe 120 crores, 130 crores, but it will continue forever as long as you're in business, because we believe we have to keep on doing innovation and do new filings.
So 120, 130 crore will be that number?
Yeah, it will keep going on forever.
Okay, got it. Thank you.
Thank you. Next, we have a follow-up question from the line of Pragya V from Edelweiss. Please go ahead.
Sir, I have a follow-up question on the investments in our, base molecules which we have made. So when do you see that you would utilize, full potential from the increased capacity? Is FY19 the year, or will it take, further time and full potential you would see in FY20? Just from the base molecule capex.
Yeah, 19 paracetamol will see the full benefit. We will utilize the full capacity. Metformin will be 20, and part of the 70% of the new PFI capacity also will be in 19. The rest will be in 20.
Okay, so if possible for you, can you quantify, what is the kind of growth this business can give you? Just the new expansion in FY19?
We see about 15 to 20% growth conservatively going forward.
Okay. And I just wanted to clarify one thing. FY19 you said 50 crores of OPEX, right?
That's right.
Yeah, and apart from that, are we due to spend anything on the ongoing capex in FY19 as well?
Some of the capex which we have provided for the current year can spill over into the first month, but otherwise there's not going to be anything new that's going to happen.
Okay, that's it from my end. Thank you.
Thank you. Next, we have a follow-up question from the line of Bharat Saini from Equirus. Please go ahead.
Yeah, hi. Thanks for the follow-up. So I just wanted to know what was the contribution of Prasugrel during the quarter?
Financial measurement that we couldn't get it as of now. As I mentioned, we could manage to earn a fair share, and we are yet to reconcile to understand the financial impact.
But it is there in the financials during the quarter, right?
It will be there, but I don't know if you're aware, for this molecule, what we did was, we have a marketing setup in the US ready for RX today. But in October, we were still in the initial stages, so we out-licensed it again to another partner. So it will not appear in the revenues, but the profit will come into the balance sheet of Granules. Revenues will go to somebody else. Because it's being made by somebody and supplied to somebody else, the profit share would come in.
Right. Sir, and as you refer that you had your own front end ready by October, so all the expenses related to front end has already come in the P&L?
It's just ready from last month itself. Last quarter it was not there. Last month we started, and from now on it will come into the P&L, but it won't be a big amount. RX marketing is, for a few products, is not that complex.
Understood. And sir, lastly on the product where we had a TAD on in Jan, so I believe that you got some statistical, as you mentioned, query. So that query has been responded, and if it is responded, then when was the last time we did that?
It was just early this week we responded.
Early this week. Okay.
Yeah.
Okay, understood. Thanks.
Thank you.
Thank you very much. Due to time constraints, we'll take that as the last question. On behalf of Granules India Limited, that concludes this conference. Thank you for joining.